Financial foundation. What is the purpose of it? What do you really need within your family plan? And how is that very critical for you? Let's go over it real quick. Check this out. How we develop a financial plan is very critical within a household. Within your family, you have to go when it comes to your finances. Where you at right now, where you want to be in the future, where you want to be in retirement, where you want to be halfway retirement. So let's take a moment and think about your current position. How old are you right now? What is your current family structure? How is your savings looking like? Are you thinking about the next 5, 10 years where you're going to be at? Is that something within your plan? Or is your plans will mostly incorporate what am I going to do next week, next month, or the next 3 months? How far out are you looking to ensure that you'll be able to develop a good plan to be able to adjust to it and be able to be successful as you plan through it? And of course, things were going to happen in life. By having a plan in place, it's going to allow you to react to those positions and things to move forward. So, what is the component of a financial foundation? First things first, we want to make sure we have, and anything that you do in your life, there's something you have to have a foundation. Foundation is what? Where you stand, right? What is the strong part that you have a stability standing that whatever you're facing, you have a good place to stand on to be able to defend yourself or go offensively about it. Okay, let's think about that like that in the finance world. You're gonna have a stable foundation where you can be able to stand strong, to be able to react either offensively or defensively. All right, what do you need to establish that foundation? We're gonna be able to identify certain critical objectives within your family that you want to make sure are definitely going to be met. So as we go through this, follow me. As we develop the financial plan, all right, what are some main goals that we're going to be able to look at that you want to make sure that you hit? One thing we're going to make sure, objectives we want to hit, okay, we want to have mortgage paid off, right? Got that paid. Our children education is going to be one, right? Child education. What else do we got? What else do we got? Medical expensive. There you go. Okay, medical expensive. Medical. Oh, look at that M. Get that fixed real quick. Medical. What else do we got? Any listen to anything? What else? What are things that you want to make sure that you have planning for your finance? According, savings. Here we go, big one, savings. Okay, how much you want to be savings? Retirement, perfect. Okay, retirement. Okay, all right. So we identify some key first of what you want to hit on your financial plan. How do we develop a foundation for this plan? Okay, we have objective, we have goal on. You want to make sure your mortgage paid, you want to have child education stead, you want to have medical taken care of, you want to have a savings plans to be established, you want to have your retirement in place also, right? So we got those little things already. Thinking about what do we got, this is a development plan. One great thing about financial plan is a working document, but you have main objectives that no matter what, these are your objective, all right, that you guys are definitely going to be hitting. No matter what happens, these are the main things that you're going to make sure you're going to hit. In the military, we call those checkpoints. What are my checkpoints? All right. So my phase lines, my objective. What am I going to be doing to hit certain things in my financial plan? For that, I got to have a foundation. Right. So before we initiate this plan, we got to have a foundation established. Right. So what is my financial foundation? What is my financial foundation? How do I develop a financial foundation? Financial foundation is things are in place so if any objectives come or any type of obstacle or any type of situation arouse during your financial plan journey, okay, this foundation is able to ensure that these are continually in motion. All right, does that make sense? How do we have that? So what's part of your financial foundation? Yes, life insurance. So we got life insurance. How is that? How does life insurance How does life insurance form parts of your financial foundation? Okay, you're right. So life, the way that Mr. saying the life, okay, you're right. Life insurance is a crucial part of your financial foundation because it allows you to identify the monetary goal, the monetary goal that you want to have, right? The life insurance is going to go ahead and protect that. Boom. So the monetary goal, life insurance is going to protect that. What I mean by that. So as we develop a financial plan, we identify how much does the mortgage cost. We identify how much child education is going to cost us. We're going to identify how much medical, something happens to us medically. What is out there that we'll be able to identify medical. Savings. We're going to identify our savings because we're trying to get to our retirement goals. Okay? This is the main goal. So life insurance is going to give you the protection that we need as we work our plan. As you're 30, 25, 40 years old, right now, you got 25, you got 30 years worth of living to work on this, to make sure when you hit your retirement age, okay, you guys set in a position financially stable. So, you guys following me on this? If not, let me know. Go back to the video and re-listen to it, all right? So, financial foundation supports the financial plan. What are the objectives within the financial plan? What you have identified within your family, all right? But these right here, no matter what, are always going to be part of your financial plan. It is. It's going to be on it. Okay. So as we keep moving forward, what else are we identifying on the financial foundation that we need? Okay. In the foundation, we need to have emergency fund. So emergency fund. An emergency fund needs to be about 6 to 9 months worth of savings, of expenses, of monthly expenses. Okay, your emergency fund has to be between 6 to 9 months at least of your monthly expenses. So something does happen, you have those funds. You lost your job, you got laid off, you got hurt, there's no income to pay the rent, to buy the food, to pay the car, to pay the insurance, to buy the dog's food, to take the dog to the vet. Those type of expenses. An emergency fund is part of your financial foundation, which allows that to be 6 to 9 months of savings you need to have in place. Okay. What else do we got on the part of your financial foundation? What else do we need? So we got savings. We got your emergency funds that you immediately allows you to react for an emergency, those funds, and you want to have your savings too, right? Savings, current savings. All right. So this current savings is going to be a percentage that you utilize of it. So you might look at what? Anywhere between 10 to 20% of your household income. You say you'd be able to save that? If you're not able to save this right now, if you're not able to save at least 10% of your household income, monthly income, then you definitely want to look into establishing. Before we go there, you got to make sure that life insurance is set up. You want to make sure your emergency funds are set up when it comes to your financial foundation. This allows you, and you have your savings, okay? A little bit of savings. How much do you want to have saved? Well, once you already set up your emergency fund, okay? Once your savings has established your emergency fund that we talked about, that 10 or 20% else that we have. So emergency, you already your objective here was your emergency savings, right? Saving for emergencies, and you're gonna have then open savings. The open savings is gonna allow you to open up your income, your monthly income, to diversify to wherever you gotta go. If you want to go buy crypto, you want to go buy stocks, you want to go buy EFTs, you want to go open your IRAs, you want to go ahead and open an annuity, you want to do whatever you want to do on that part. You want to go risk your money out there. Before you go out risk your money, make sure this foundation is established with a life insurance and your emergency funds. The 10 to 20% savings that you put into your savings should fund your emergency fund 6 to 9 months. Once that's established, once these two things are checked, life insurance check, emergency fund check, now I have money to go out there and play. Okay, don't go out there trying to play out there and just go out to you're not going to go play football without your helmet. Okay, you're not going to go to war without your bullets. All right, so little things like that, what you got to keep in mind. What do you have in place to be able to go initiate the plan? All right, as we talk about the family plan and the family foundation, what are the key elements of your foundation that we were talking about? We're talking about life insurance, emergency funding. What type of life insurance you want to have in place? Those are the things we're going to be able to sit down and talk. What are your current needs? What is your currently budgeting? And what it is that you need to make sure you have coverage. You want to make sure that the life insurance, okay, this life insurance needs to go ahead and cover if something happens to you from now to your retirement age, when your financial plan is going to be completed, okay? Because it's when you hit your retirement. Once your retirement age, from now to your retirement age, how much money do I need to make sure it is in place? Or what is my money that I need to make sure I have reached so can my family be able to continue living the lifestyle that they need to be living at retirement age? Your current lifestyle, or one better or one less. You decide that what is your current lifestyle. But one thing you got to keep in mind is what inflation and taxes. Those things are always going to be there. You're going to pay your taxes, you're going to pay inflation. So how are you going to avoid paying taxes on certain part of your retirement incomes? There's plenty of strategies out there. We can definitely talk about that. Okay. So when we're going to be able to identify your life insurance needs to go ahead and cover your mortgage, needs to cover your child education, needs to cover your medical, and needs to cover your savings, and definitely needs to cover your retirement. So you're telling me right now, this specific product is going to be able to give me a foundation for me to actually work on this plan. So if something happens to me, my life insurance can pay off my mortgage. Well, my spouse then don't have to worry about that. House is paid off, and what happens when the house is paid off? You have equity, so the money's there. So life insurance paid off the house. Guess what? Now you have equity on the property. You can either get loans out of that, you can sell the property and get that money out and all that stuff. So what it is, that liquid asset is going to be available there for it. Child education, same thing. If you have a good planning, that life insurance is going to be able to cover the children's education. We average about $150,000 right now. I will probably add those numbers up in the coming years, but averagely, that's why you got to make sure that's in place. So if something happens real quick, boom, that policy can be. Now there's different types of policy. What I mean by that, you're going to have your term policies. You have terms, which I talked about before, which has a coverage from 10 years all the way up to 35 years, depending on the carrier. Okay? And we have permanent policies also, which covers you up to 121 years of age. Okay? One of those specific policy or combination of both are going to be able to give you the support you need for this right here, for these. Okay? A term policy or permanent policy or a combination of both, okay, will allow you to hit these goals right here. It's gonna allow you to support these roles within your plan, allowing you to continue moving forward in case something does happens to you. This is gonna ensure that the plan is executed for your spouse, for your living spouse, or your children, depending on what it is your goal that you're looking at. All right. So we understand that part. Life insurance, crucial to have. One thing in the military, for example, we have a called SGLI, and SGLI is Soldiers Group Life Insurance Policy. So technically, you pay very little. You pay about $20-$30 for it. Boom, That's it. It covers us. Something happens to us while we're in a war or whatever, we die during service, family gets paid. Great policy. I'm gonna give you a little bit of story about what got me mostly involved into this industry and what got me moving forward. All right. There's a part of my career. There was an injury happened in Afghanistan. Got it. That's a whole different story, and that's a different talk later on because that I'll be able to talk to you about how life insurance actually assisted me and some of my fellow soldiers with the current payments out there that were out there. But anyway, what got me mostly into the industry was being a casualty assistant officer. My job was mostly it. You get detail out, you get rotated through, you have something called Red Cycle. Your unit will be like, hey, you're now in charge of supporting missions of the base. Okay, so a lot of times you do different types of jobs. One that I got selected was to be a casualty assistant, which means is I would escort a body of a soldier or a service member that's previously served, a veteran, right? And if they recall, they call the VA or they die in service. So technically, my job was either to escort the body to the final destination, which would be to the burial site, and or help the family when it comes to it to do any type of documentation that the service member left behind. Okay, if you're a veteran and you did not retire but you're still a veteran, you still got certain benefits out there that you have, like you're entitled to depending on your type of discharge. And if you're a retiree, there's other types of benefits that are available for you too. With that being said, I went to a family home. The spouse already knew this is a veteran who did serve 20-some years. He died like 20, 30 years after service. So the thing is, when he passed away, he already has done his time and all that stuff. He never left his wife plan, his spouse. There was no life insurance involved. There was no retirement pay as the putting the spouse as a beneficiary if something happened to him with his retirement. Nothing. The only thing that was available for her was the Social Security that he was collecting. That was it. Okay? That for me was an eye-opener. When I saw the sadness of that lady sitting down on the sofa, looking at me and telling me to get out of her house because not only has she lost her husband, but now the income, the reality was coming in that the income that was coming in is no longer there. So that was an additional stressful on me. Next day, I went over, see the lady. She was a little bit much better. She apologized. I told her, don't worry, I'm used to it. But the thing is, that put a little belt on me to be an advocate about to ensuring we have a financial foundation established for our family. So why are we leaving behind to our family, to our loved ones? Okay, that's something to think about. Sometimes we don't want to think about stuff like that, but it's a reality that happens. Okay, so you got to make sure you have that in place on that. If that spouse would have had some type of other benefits or a life policy, at least she would have known that that income replacement that he was bringing in was going to be replaced on it. Okay, so as we develop a financial plan when it hit to the retirement, and part of the financial plan is what? The foundation. Okay, so part of the foundation, then we're identifying key factors that we need to support on the financial plan. Okay, as you sit down, I would like for you guys to be able to write down certain things that you want to have achieved at your retirement age. And I want you to identify that right now. At what age do you want to retire? Is it 60, 65, 70, 55? Okay, identify that. Identify then how much money you have saved right now on your bank account. Okay? Now identify how much money you have saved up on your emergency funds. Now add up all your money that you have on your retirement investment. You have IRAs, 401ks, 403bs, TSPs, you know me, whatever, you know what I mean? All those type of investment tools you got out. Add all that up. Right? Now see where you're kind of looking at. With those numbers that you have right now, give me a call, send me a text. All right, we're going to be able to sit down. Any of the agents are going to be able to sit down with you and go through your financial plan financial foundation. Let's develop something. Identify what is needed, not needed. Do you have any medical issue? Are you a smoker, non-smoker? Are you taking care of your health? All right. Starts with us. Okay. Starts with us being the ones on it. So we got to make sure we are in a position, are able to work, able to establish, able to develop a plan to ensure as we work our life to reaching our goals, we want to make sure this foundation is intact by having my life insurance, either a combo of a term and a perm, having my emergency fund with my 9 months or 6 months savings established. Okay, those are the key right there, right there. These two things right here is gonna support your financial plan. That's it. All right, very easy. Any questions? Nothing? All right, guys. I want to thank you guys for your opportunity. I want you guys to thank you for the time to listening. If you made it this far, I definitely would love you guys to subscribe, send me a text, write down plan. I want you guys to go ahead and text the word plan. All right? Plan. I just want to make sure you guys are listening to this and you're developing a plan. I want to make sure that we can sit down and just talk. Let's go over what you currently have. Ensure you have something in place that's going to benefit your success of yourself and your family to establish that financial plan and to hit your retirement goal. Okay? Looking forward to speaking to you guys. Have a blessed one. Success for the best.